Trump is leading Biden nationally, as well as holding the advantage in a number of swing states. That, according to New York Times Siena poll from July 15th. Just a note, many of those numbers are still within the margin of error. So what might a swing back to a Trump presidency mean for resources? Byron King is a geologist and a writer for Paradigm Group. Byron, welcome back to Kitco.
Great to be with you. Thank you.
If Trump returns to the presidency, what changes do you expect in the resource sector, Brian?
I expect many. I expect that we will get back into an oil and gas, fossil fuel economy, much more so than under the Biden administration. Onshore drilling, offshore especially drilling, will be back in vogue. And when I say onshore, I mean on federal lands, as it is right now. People drill on private lands, but the feds have pretty much locked it all up. And the offshore has been a disaster for the last 4 years. So that's going to change. I expect renewed interest in nuclear. The Biden administration has talked a nuclear game, but administratively they have dragged their feet on everything. I expect more of a fast forward on that. There are certain things that will continue. We will still see some renewables because that's cooked into the tax code. It's cooked into the subsidies. But the political emphasis is going to pull back from the green side. At the same time, the world needs more copper. We have to rebuild the U.S. grid as well as the rest of the world, which is building out its own power grid. And then there's a lot of momentum in the electric vehicle side, although there will be less government pushing on that. So those are just some of the things that we'll see from a Trump administration, starting at noon on January 20 in 2025.
Byron, looking at the critical mineral sector, though, one of the initiatives from Biden has been the Inflation Reduction Act, and that has been the disbursement of funds and investments and loans for downstream infrastructure, such as Lithium America's $2.2 billion for Thacker. Is there kind of concerns that that focus that the Biden administration had goes away under Trump, and what could be the impact for developing that critical mineral supply chain?
Well, some of the big projects are in motion. And once a body, as Isaac Newton once noted, a body in motion tends to stay in motion. It would be very, very tough to kill some of the projects that are, moving along. But there will be different emphases. I think a Trump administration will be still open to battery development, battery innovation. It's not so much for the green reasons, but just for technology reasons. The idea that we want to rebuild an industrial base in the United States, and then the fact that he picked somebody like J.D. Vance from Middletown, Ohio, which is America's ground zero of the Rust Belt, means that he is truly focused on getting that message out that we are going to, rebuild, rebuild an industrial base across the country that has been, abandoned and, just deconstructed for the last 40 years. And this is not just, this is Trump and it's not Biden. The deindustrialization of America did not happen in the last 4 years. It happened in the last 44 years. I lived through it. I'm old enough to say that. I remember the Rust Belt, dying in the late 70s, early 80s, and it's a 2 and 3 generational issue. And Trump is focused on turning the economy around in that sense, getting away from the service economy, although that won't go away, but getting back into the idea of actually making things down at the plant, down at the factory. Giving high school kids, something to shoot for aside from, going off to college and majoring in gender studies, learning a trade, learning a skill, junior college, some college, whatever, and getting a manufacturing job that creates competitive products in the world. I think that's where Trump is coming from.
Trump seems to like tariffs. We have heard the number 100% going up. There is also, he does plan to cut taxes as well, too. Some economists warn that this could be inflationary.
Oh my goodness! In terms of tariffs, tariffs are inflationary in some respects, but the idea is to rebuild industry in America, and to say that, well, we have to pay more for our television sets or our T-shirts, because there's a tariff on what we're importing. That also means that we'll have fewer people, killing themselves with drugs and alcohol out of despair, across the country. I mean, the idea that we can offshore manufacturing as a country and as a society, and just sort of live off of the reserve currency status of the dollar, is rapidly coming to an end. Globalization, the multipolar world, with the rise of China, the rise of India, the military competition with Russia. I mean, these are things that are definitely in motion, and all of these things are going to feedback, in a loop in Trump's tariff policies, tax policies, what have you. So sure, you might pay. The people who buy steel will pay more because we're going to protect an American steel industry. At the same time, the people who make things out of steel will be able to stay in business and rebuild a business base in the U.S. I think that's the big picture. I'm not Trump, and I don't speak for him. I'm not on his campaign, but I think that's sort of explaining where he's coming from. As far as somebody like J.D. Vance, I mean, I understand perfectly where this guy's coming from. He's 30 years younger than me, but I know exactly what has happened in Middle America because I live there and I drive through it. I see it all the time in just my life, and certainly in the work that I do for Paradigm Group as an editorial writer covering energy and mines and minerals and materials, things like that.
Byron, let's talk gold. The metal is roughly up 20% year to date. The miners, as measured by the GDX, are just up 25%. The miners should be performing better, I believe, Byron, because they're going to be the riskier bet. So we're expecting a little bit more leverage.
Yes, gold is doing really well. One of the really interesting things about the rising price of gold is it's not that gold goes up in value. It's more that the dollar goes down in value. That's you have to look at both sides of the trade there. As the dollar declines, loses purchasing power, gold goes up. But another angle on gold is that right now, as we speak, you and I speak today, one of the key drivers for price increase on gold of the last year and a half has been purchases by central banks. There was a time when, in any given year, maybe 10, 12% of global gold output, mine output, was bought by central banks. Right now, central banks are buying about a third of gold produced in the mines. And so that right there is a big element of the demand. So the big demand drivers for gold are central banks buying a third of global mine output, and then Asian, for the most part, I mean, Chinese, Korean, Japanese, the rest of Asia, buying gold at, you might say, retail level, business and banking level, family office level, things like that. So gold is going up, and we know that, and we see that, and I think that's a real thing. As far as the mines and the miners go, some mining companies have done well, others haven't. In general, they've lagged the price of gold. I think two things going on here. Number one is just in the immediate term. I think now that we're in the third quarter of the year, we are about to see earnings reports from the larger gold miners, at least the large and intermediate guys, that are going to show some remarkable profits. In the first quarter, they weren't selling $2,300 gold. They were selling $1,900 and $2,000 gold. Now they're selling $2,200 and $2,300 gold, and that extra $100 or $200, most of it, some of it gets eaten by higher diesel fuel or higher labor, whatever. But most of that $200 is going to hit the bottom line. So I think we're going to see some really sweet not perhaps blowout earnings on some of the gold players, and that will wake up Wall Street. Another angle on it is that Wall Street is very disdainful, you might say, of gold in particular, but the mining sector in general. I mean, Wall Street is very, very underinvested in mines and minerals. If just a little bit of the froth on the beer of the technology side drifted over into the mines and minerals side, we would see an explosion upward. Which, for the viewers out there, I mean, I hope you know this, but I'll just tell you in case you are looking at mine and mineral plays right now at absolute bargain basement prices. In the world that's coming, not just for gold, silver, for precious metals, but for so many other things, copper in particular. We are looking at a very, very strong pricing structure for producers in the years ahead, meaning a very very profitable play, and you've got very low risk on the downside going in right now, and lots of return on the upside looking out 2 and 3 and 4 and 5 years.
Byron, make the bull case for copper right now. Is it a case of spent mines right now, or is it a case of demand? What do you see happening in copper?
Oh, it's both of what you said. Right now, many of the classic old mines, the old mineral mining districts, in Chile, in Peru, in the Western United States, in other parts of the world, they are long in the tooth. I think the average age of a major copper mine right now is something like 80 years old. I mean, when you look at the really big producing mines, you go back a long, long ways. I mean, Bingham Canyon, Utah, for example, was first operated in about 1902 or something like that. It's a 120-some-year-old mine. Some of the Chilean and Peruvian ones go back into the discoveries into the 20s and the 30s. I mean, and so these are old mines. The best ore was dug out. You're going deeper. You need more energy. You need more water. In many parts of the world, the water is a critical part to mining. And they've got water shortages in Chile and Peru. Although you don't want too much water, you don't want too much because water is a problem in mining as well. In the U.S., we've got horrible situation in terms of permitting new mines. I think the Resolution project in Arizona has been in permitting for, I think it's like 20 years. It's just a disgraceful, embarrassing number in terms, how long does it take to get these things done? So there's a problem with the aging out. But then in terms of demand, we mentioned earlier, the U.S., just the U.S. alone, and I'll throw Canada in there too. We have a grid, an electric power grid that was designed and built, pick a number, 80, 70, 60, 50 years ago, with not a lot of appropriate upgrades over the past couple of decades. And I won't be too presumptuous about Canada, but I do know the United States. We have serious grid problems. Whether it's weather related, look at Houston, Texas right now. I mean, you have a horrible infrastructure that gets blown down by a hurricane, and a week and a half later, there are still hundreds of thousands of people without electricity. And we have story after story after story like this, year after year, place after place. The grid is very, very weak. And then you add the demand to it that comes from artificial intelligence, which is a booming sector. I mean, right now you've got AI companies literally making deals with nuclear power plant utilities for electricity. If you add that, you throw that in there, you throw the future electric vehicles in there, and people say, well, we'll just have more solar panels and we'll have more windmills. You can't. It doesn't work that way. Okay, I mean, you're looking at intermittent systems. Day, night, windy, not windy. They work in a grid up to about 18% of your grid power, but after about 18%, you're destabilizing the grid, and you need backup power, which actually gets us into another play that I think is undervalued, which is North American natural gas, because one of the quickest ways to make a lot of electricity in a hurry is with gas turbines that run on natural gas. You can built. You can get them designed, permitted, built, installed in a relatively short time. Certainly, as compared with, say, building a nuclear power plant, which takes like forever. And you can stabilize the grid with gas turbine power plants. I think natural gas right now is a bargain looking for an upside.
You mentioned it earlier. This question, Byron. I think it might be pretty broad, but it's always worth a look. What's the most unloved part of the resource sector right now?
Oh my goodness, the most well, everybody. There's no ugly babies, and so, and another old expression: every pot has a lid, in terms of a broad investor base, for people out there who, what should I get into? I mean, do I want to get into, exotic metals? Do I want to get into, say, tin? Well, yes, you do, because, every piece of electronics in the world is put together with solder, and solder comes from tin. There's really only a couple of tin plays out there, but in terms of the one that's really just underappreciated, I have to get back to copper right now. Copper is a very underappreciated metal. Most of the copper plays are undervalued. Big ones. Rio Tinto, BHP, Freeport. But then you get into other sort of more exotic plays, but they're really interesting. Ivanhoe Metals, Ivanhoe Electric. Those are two different companies, but the electric being the copper angle to it. You look at a big company like Osisko Development, for example. Again, you think of them as a gold play, but they're getting into copper. So I think that the biggest opportunity for most investors out there is to stick with a basic like copper. If you want to get into a little more exotic stuff, I'll mention a company that I've talked about a lot in the past, year and a half or whatever, and that's a company called Energy Fuels. Energy Fuels is and they do uranium and an alloying metal called vanadium at a plant out in Utah, in Blanding, Utah, which I've visited. And they also, just a few months ago, the beginning of this year, they finally turned on a circuit for doing rare earth elements, the magnet metals, things like that. And so they've been very, very well managed, very aggressive about moving into rare earths. One of the problems with processing rare earths, for example, is that many of the rare earth minerals, like monazite, of which, look, I have a monazite mineral specimen right here. I would never throw this into the crusher. This is a beautiful crystal of monazite from Madagascar. It's probably worth $500 at the Tucson Gem and Mineral Show. But one of the problems with monazite is that it has low levels of uranium and thorium in it, and so when you process it, you wind up with radionuclides. And so if you're just Joe Blow and you want to process some monazite mineral sands, you're going to have a radioactive problem. But if you're Energy Fuels, and you already have a uranium circuit in your plant, you can take the uranium side and just shunt it over. You can take your uranium product that comes out of the rare earth side and shunt it over into the uranium processing side. So they have the nuclear problem solved. So yeah, uranium has done well in the last year and a half. It's going to still do well. It has its ups and downs. But rare earths are also there. But again, it gets back to just good. This is elemental copper here from the Keweenaw Peninsula of northern Michigan, and the geology that extends into Ontario up through that whole Thunder Bay district there. But this is a $1.5 billion-year-old chunk of copper that was emplaced long ago. But it was removed by a glacier and polished up, which is why it looks so smooth and everything. But you hardly ever find this stuff. This is really, really, really rare. Most of the world's copper is not elemental copper like this guy. Most of the world copper that comes from mines is at very, very low grades. We're talking fractions of a percent of concentration. And so But if we're going to rebuild the grid, if we're going to keep electrifying, and not just we in North America, but the whole rest of the world, where people are people are just eager for for light bulbs, for air conditioners, for microwave ovens. This is the element of the future, certainly for the next 5, 10, 15, 20 years. There's not enough of it coming out of the ground. It's very difficult and long range to put new mines and such into production, and the prices for this are up, and they're going even more up as we look ahead. So I predict.
Just to follow up, Byron, you have a interest in energy fuels, correct?
I personally do not own a single share of it. No, just
Okay.
I have written about it, but I'm not. If you can go out and buy all the shares you want. It won't do anything for me one way or the other. When I visited the company, I flew out on my own dime. I rented my own car. Well, the company I work with, they paid for it, and actually, I think I even bought my own lunch. So no, I have no personal or financial interest in it. I just think it's a great company, and I like to, and I'm more than happy to give them a good point, a good comment.
Byron, thank you very much for your time.
Oh, it's a pleasure. Thank you. Good luck to everybody out there with your investing. And hey, watch the news. If you don't like today's news, just wait around. It'll change tomorrow.
My name is Michael McRae. You're watching Kitco Mining.